Hello everyone. Good morning guys. Good morning. Good morning. How are you doing today? Is everyone all right? Markets they got pretty active, huh? That's the euro US dollar. We are on the daily on the hourly time frame with the London. Actually it started prior the European Open and it just moved 22 pips. Okay. Still have some 25 minutes left for the London Open. They pretty dumped the US dollar, especially the Kiwi. FOMC minute last night, and of course, all this price fluctuation. This week, guys, fairly strength in the New Zealand in general. Some weakness on the pound Kiwi. Nice trends here. Nice order block setups to capitalize on this one. So, New Zealand US dollar price at this point failed. Let me show you the point. So price at this point failed to make a new low, moved upward 1, 2, 3, 4, 5, 6. That's the 7th bullish candle in a row. Price made higher high. So maybe it's going to continue moving upwards, and that's fine. Australian dollar, US dollar. That was at this point here, it was a kind of significant area of resistance. The price moved below that, created this low, and now it created this high. So this one is going to be a significant area or block zone to watch it for the next week. So now price it's moving higher. We expect it to reach this area right up here. If you go on the 4-hour time frame, maybe you see it a bit more clear at this point. USD Canadian dollar, here is the thing. At this USD CAD, that's a 4-hour time frame. I have I created a plan early this week to look to go long at this area and this area here. So first I wait to see the price to come at this point before I picked up a trade. Why? Because guys, on the daily chart, by the way, last night I hosted a webinar for the Trading Pit PropFirm, and it was all about the time frame correlation, and there are two types of time frame correlation. The first type is when the daily direction and the daily price action they confirm each other, and the second one is when the daily direction is not in alignment with the daily price action. So these are two different there are totally two different things in trading, and traders who really struggle to pick up the direction right at some point is because they can separate how to trade each occasion. So it's worth watching at the webinar. I'm sure the team will upload it later on the YouTube under the Trading Pit, and I will encourage you to go and watch it, or I can share the link here on the next live. So Irene said, "Am I late?" No, you're not late. Hello from South Africa. Someone said hello. Okay. So because the daily price action and the daily direction are not in alignment, when the price comes here, I'll be interested to confirm the price action rejection at this region, and then I would be looking for to pick up the trades. Okay, so I'm not going to blindly just place the orders here. This one we could have done to blindly place the orders on the pound New Zealand. I'll show you in a while. So on this one here, let's see what's going to happen. This area of resistance here, a broken support now can act as a resistance area. This one here can bring, there are a lot of order blocks and rejections created. The price moved fast and far away from this broken support, so easily it can act as resistance, and if the price dipped in and bounced upwards, we expect it to come and retest this area. You can trade this stuff in any time frame. New Zealand, pound New Zealand, the price is in a downtrend. Price makes lower highs and lower lows. The moving average they crossed, and if we check the hourly time frame, even yesterday it was a nice setup here. This one here, price, it's in a downtrend, makes lower highs and lower lows, bounce to the upside. This order block here would have been a good trade to enter short there. Now, when the price action on the daily chart is, when the trend on the daily chart is down and the price action the previous day, it's a bearish continuation price action, the BC, then we can feel confident to place limit orders to get fill on a retracement. That's fine. That's a good way to trade, of course. But when the price action, like we just saw, the US dollar, Canadian dollar, the daily price action is not a continuation to the upside, a bullish continuation, then it's not worth putting those limit orders. When you watch the webinar, I'm sure you're gonna understand everything. Okay. So let's check the USD, Japanese yen on the daily chart. Of course, price it's fluctuating a little bit here. On the weekly chart, it was more bullish than bearish this week. We see the price action moved a bit significant. So if you want to check the hourly time frames, there are support all the way here that they can cause the price to bounce upwards, but we don't go from the weekly to the hourly time frame. You can go from the weekly to the 4-hour. For example, you identify the areas of support, resistance, and the price action on the weekly, then you go to maybe the 4-hour chart to pick up the trades. Okay. But not from the weekly to the hourly, guys. All right. So, for example, on the weekly time frame here, USD JPY price is bullish, still room to move to the upside. On the daily, if we go on the 4-hour time frame, where that was Friday, so here is Monday, started from there. This rejection here was a good kind of order block, so we could have used, some traders I know they use half of this area up. Isn't the gun box, why is not, here is a gun box. So they like to use 50% to enter with the order block, so 50% have been here, about 20 pips, and until the recent swing high it was about 70 pips. So that was the trade of the week, to be honest, with the USD JPY. Now, of course, if you go down to the 30-minute, to the 15-minute charts, you're going to find more trades. Okay. But here at MarketMindsMastery, we like to teach high probability trading methodologies and setups. So the gold, what's going on with the gold? Price enter in this area of congestion here. Got rejected 2 days ago in a row, 2 days. Now is fairly bullish within that block, and if the price is going to surpass this R2 weekly resistance, we expect it to move higher. On the weekly, though, it wasn't that convinced that the sellers will continue because of this rejection here, but nevertheless, we will wait and see what's going to happen. So either a break to the upside or not. If we check the 4-hour time frame, here it was the once the price entered this area here and stopped, I picked up a trade from this point here, and I got stopped out at this. I don't know why. It was just with the spread, 1 pip on the spread. Maybe I didn't place correct my stop loss. These things happen to everyone, guys. Even for us, we are trading for 11, 12 years. We still sometimes make these errors, but these mistakes, it's what it is. Okay, so you don't need to beat yourself up every time you make a trading error. We are all humans, and it's a part of the trading. Now, price enters to this area of resistance. So around 30 pips stop loss could have give a good decent 2 to 1. That's what we try to aim when the trade is counter trend trade, and when we don't trade the actual trend and we take trades in the opposite direction, we try to go for 2 to 1 and not be greedy in any other different way. Euro New Zealand, again, we start this webinar with the weekly chart, so let's continue with the weekly charts. On the weekly chart, it was this inside reversal after the price broke to the downside. Then you could go to the 4-hour time frame, let's say, to pick up your trades. For example, price breaks below this retest here, wasn't a solid retest to trade, but after this move to the downside, let's say, it created this very, very nice order block, and that was a good setup. If you use this area to enter from the 50%, you would have go with a stop loss, let's say about 20. Now, when you're trading, guys, the QE pairs, or when I trade the QE pairs, I prefer to put a stop loss anywhere between 25 and 30 pips, because they have wide spreads. They are quite large, their spreads. From my broker, the one I use when I trade the PropFirm, the challenges. For example, here on the pound New Zealand, the spread is 6.4. All right, so it's a quite large spread. That's why we try to trade with a little bit wider stop loss on the some of the crosses, actually the ones that they involve the Kiwi. And Kiwi is the New Zealand dollar. Any questions so far, guys? Pound New Zealand again. Okay, so that was actually the good for this week. Price broke below these lows here, and on the 4-hour chart, it created this area. It created this after this lower low. Here it was the order block entry. Wouldn't have been triggered on this one, because if we are consistent and we use the 50 retracement, this one here didn't get triggered, and it was the limit order I placed here, and I didn't got filled. Otherwise, I would have been in a good trade. But again, that's trading. We cannot do anything about it, guys. Then the price moved to the downside again, came back up, gave another entry here. That was more obvious on the hourly time frame with this order block there. So this one here, it was a good, another good trade. So when you, just to avoid any kind of confusion, guys, when you try to pick up a good order blocks to put the limit orders, to set up your limit orders, it's good to play between the 4-hour and the hourly time frame. Sometimes you get better placements on the hourly. Sometimes, like this one here, the order block wasn't that visible, and that it wasn't make that much of common sense on this time frame, so the hourly chart would have been a better help. Euro Canadian dollar price broke to the upside quite nicely here. And we do expect it a rally beyond that. The reason price stopped exactly at this level is because of this order block on the left, bearish engulfing here. So it paused the market temporarily, and we do expect to see the continuation. Now, why we do expect to see the continuation? Simply because on the weekly time frame, the market closed as bullish, and it didn't let the sellers to continue selling below. So now we are trading above the 50 period moving, or that's the, which one is this one? Yeah, that's the 50 period moving average on the of the daily chart. So that's fairly bullish. Now fairly bullish on the US oil as well. Price created this higher close here. As you see on the daily chart, yesterday it bounced from this intraday or daily support. On the 4-hour time frame, price came all the way here. It tested this order block right there, and it moved upwards on the hourly time frame, though this order block would have been from this one here, and we wouldn't have been get filled because we didn't have any orders here. Guys, I think that's all from me today. Let's check the DAX, higher highs, higher lows all the way, all-time high. DAX, the European index looks like it outperformed the US indices. So on the hourly time frame, for our friends, they want to trade long here. This breakout, now we don't know if it's going to continue to the upside. That was the target I gave when I did the analysis, when I posted out the official analysis for the DAX this week. We used the 200 Fibonacci extension price because we are at all-time high, and price moved beyond that. Okay, guys, that's all from me today. I hope you enjoy, you find some value from the webinar, and I wish everyone to have a fantastic trading day ahead. And I will see you all tomorrow again, of course, at the same time. Bye, everyone. Have a nice day.